You're probably doing it all wrong when shopping around for a mortgage lender. In this video, I'm going to share with you how you don't waste your time and you actually do it the right way when shopping around for a mortgage lender. So let's go. Now, most people, when they're shopping around for a lender, the first thing that they do is they focus on the lowest rate. The problem with that is that the rate changes daily and sometimes multiple times throughout the day. Here, let me show you what I mean. So if we take a look at Lois and Clark and their new scenario, they're going to be buying a purchase price of $350,000. They're going to put 20% down, 760 credit score, single family home, and they're going to be based in, let's say, Maryland. And so when we take a look at their scenario, look what happens at the rates. So these are the last 5 days rates with the APR and everything, par rates, so no points or better that they would have been receiving as a quote from us. So if we look here, we'll see that on December 21st was 2.82%. For that scenario was 2.82%, APR 2.92. They were getting $2,300 in lender credit. Now on the 20th, a day before, was 2.82%, but they were getting $3,000 in lender credit. APR was less. On the 17th, Friday, was 2.82% again, $3,000. But here, the star means there was actually multiple rate changes. And what we mean by that is this lender credit was going up and down. The par rate was going up and down. It could have been more lender credit in the beginning of the day, or there was points, and it actually improved to 2.82. And then on the 16th of December, the rates were actually a little bit better, as in the par rate got shifted a little bit lower at 2.75, and there was multiple changes for the rate pricing for that as well. And then on the 15th, again, 2.82, multiple rate changes throughout the day, finishing it off at 2.82 with lender credit of almost $2,600. So you can see just in this example of the last 5 days, the rates were going all over the place. The rate pricing was. Now the rate stayed at 2.82, but the lender credit or the points that's associated with the rate was going all over the place, up and down, sometimes multiple times throughout the day. So you could imagine if you're shopping for just rate specifically, you received a quote today from one lender, and then you received another quote from a broker or lender the next day, you are not shopping apples to apples, no matter your best intentions, because of the fact that the rate changes day by day. And the rates are changing constantly because it's tied to the financial market. It's almost like a living organism that's moving up and down as it goes through. And it gets impacted by, let's say the coronavirus is rampant. The rates might improve. Oh, the vaccine is getting better. The rates are going to go up. Oh, the feds are going to hike the rates. Their rates are going to go up. So it's reacting to the market conditions. So you cannot receive one quote from one lender one day and then another quote from another lender the next day and then try to shop apples to apples that way. That is not the best way to do it. Now, shout out to Javier Vidana for inspiring me to share this. I love the quote that he said. He said, a rate is something you notice, but it's not something you focus. And I love that because yes, you notice where the rates are, but it's not what you focus on. So here are the things that you should focus on when you're shopping around for a lender. Now, number one, I'm stealing this directly from Javier. So the first thing you should do is you should be shopping around for availability. On a lot of my videos I share with you, I challenge you, text me 240-292-1663 and I will respond to your text message if you are in the local area of the Maryland, Washington, D.C., and Virginia. If you're shopping around in any other states, we are licensed in 15 states, but let's say you're shopping around with different investors, I challenge you to text or call your lender or broker on a Saturday like Javier said, or even a Sunday, or even the evening. Now, if you're calling them or texting them at 1 a.m., I highly doubt they're going to be responsive to you. And let's say a Saturday morning, a Sunday morning, or a Sunday afternoon, Saturday afternoon, text them, call them to see how responsive they are. Now, if you're shopping around with big banks, I agree with Javier again, they're not going to be responsive. They're probably going to take their sweet time calling you back or getting back to you. But a loan officer that's working for a lender or a broker is encouraged and incentivized to be ultra responsive. Now, there are folks that's not going to be, but I encourage you, try that out. And they should be able to provide you a quote relatively quickly. with a few pieces of information, I would be able to give you a quote if you're in the local area during the conversation or the phone call if I'm in front of a computer, or the moment I get to a computer, probably in the 30 minutes or so that it takes me to load up my computer, punch in some information, and see what the pricing is going to be. So I encourage you to do that. Now, number two, when you're shopping around, you should be shopping around for chemistry. Now, once you've found who is available and who's ultra responsive, you want to be shopping around and trying to see who do you connect with well, because not all loan officers are built the same. Not all of them have the similar style. You could imagine some individuals are very more laid back, and you want that as a person. You don't want to have a lot of detail or know a lot of detail about the loan process or the numbers. Sometimes you just want to entrust it in them and say, okay, I trust you, take it on. Some individuals want a lot of detail. So my personality is I am ultra detailed. I know how the ins and outs of how the math works for the loan process. And so a lot of my clients are attorneys, are consultants. They work for the federal government. They are commissioners of certain departments in Washington, D.C. And that's because they appreciate that I go into detail and I explain to them how the math works. Some individuals of some of my clients, they don't like it, and they actually prefer my other counterparts in the company. So I would say number two, take a look and see if the chemistry is there. And by the way, if you like these tips, I appreciate if you click that like button. It helps with the YouTube algorithm and gets this video in front of more people that needs help to understand how to not waste time when shopping around and how to actually shop around the best way for a mortgage lender. Now, number three, the third thing that you should be shopping around for is their knowledge for your specific situation. So depending, let's say you are wanting to do a 1031 exchange. The loan officer doesn't understand it. You shouldn't be leaning on that loan officer just because of the rate or something. You should lean on them for their expertise in that area. A 1031 exchange requires not just a loan officer, but a network with the CPA, with the attorneys to draft up everything to get that loan packaged correctly for that transaction. Now, for example, another one would be a USDA loan. We don't do a lot of USDA loans, so I wouldn't recommend that you come to us for it. Now, we have the products, but I would highly encourage you to go with somebody that does a lot of USDA loans. Now, the last thing that I would encourage you to do is to be looking for communication style. Now, you would first have to reflect on yourself to see what kind of communication style you like. Do you like phone calls? Do you like text messages? Do you like emails? Do you like all three? Do you like video emails? What do you prefer as a communication style? Do you like constant notifications and milestone updates? These are all things that not everybody is built the same. And so if you're looking and wanting those features as part of your loan process, that has to be one of the things that you're going to be looking for as part of your checklist to see if that person can provide that. Myself, I prefer email and text messages, and then if it's urgent, I'll get on the phone with my clients. But some folks, they want to be on the phone every single time throughout the process of updating on their milestone updates. We don't do that, or I don't do that. Some of my colleagues actually do, and they prefer the phone call versus a text message or an email. So really look at what is your style of communication, because it is going to be a 15 to 30 day commitment working with this individual to get from start all the way to settlement. Now, if you really like this video, you'll probably like this next video that I'm posting right here. It's about the things that you should not do to slow down the mortgage process. So you can click on that to watch it. Otherwise, appreciate you if you like this video, as well as subscribe to this channel, and I'll talk to you next time.